Okay, what is up, tycoons? What's up, traders? Super excited for today's video. Coming at you guys with the viewer request. We're going to take a look at LABU. All right, this is the bullish biotech ETF. All right, we're also going to take a look at LABD. It's good to look at both of these, right? This is the bearish one, and then also XBI, which is just your standard, spider biotech ETF. We're also going to look at the XLU XBI chart. Now, I like to call this your risk on versus risk off, and you can see. It really went parabolic at this time frame over here. And whenever you see this go up, this is basically utilities outperforming biotech. And then whenever you see this go down, that's going to mean that biotech is outperforming utilities. And the reason I like to say this, risk on versus risk off, is because XBI, the biotech sector, in my opinion, is one of the most risk on asset classes. And then you have XLU here, which is going to be one of the most, risk off asset classes, right? So we're going to break those down. We'll even zoom in a little bit and take a look at some of the signals that you guys can start using. As always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the full disclaimer. Now, this is our LabU daily chart, and it actually played out perfectly, okay? If you look at my last LabU video, we did exactly what I thought we would do, all right? And we got a nice 5-wave impulsive move to the upside, came up, hit our major resistance levels here at 757, and we've started to see a pullback, right? We had this supply zone here. We were a little bit wondering, where are we going to come in here, consolidate, and drop back down? And sure enough, we actually broke out, came back, retested our fib levels, also retested this supply zone as a demand zone now, and pushed up higher. Okay, so now we're seeing if this old supply zone, all right, can become a new demand zone. And we've tested it multiple times over here, and we've also tested it again now over here. And what we're seeing is potentially, we're seeing some selling here, and this is what I like to call, market makers essentially, grabbing liquidity. Okay, this is the major zone, all right, of liquidity. And so if they want to push this up higher, okay, oftentimes you'll see that they'll stop people out looking to enter at the bottom of the zone, get the liquidity they need to actually push things up higher. Now, that's no guarantee, okay? If we come through this area and retest it as resistance and push lower, there is a strong chance we could come back down to this demand zone here, right around the 450 area. So you definitely want to be mindful of that. But if we take a look at our next chart here, which is LabD, right, and we can see exactly what I mean here. Okay, we had this established demand zone over here, and right here we, grabbed the liquidity, okay, all right, and stopped a few people out entering in this demand zone, and then we pushed up higher. And same thing over here, we came back down, all right, grabbed liquidity, and then we ended up pushing back up higher. Now, LabD is approaching the year-to-date anchored VWAP right now. That's going to be a strong resistance level. Basically, the year-to-date anchored VWAP is just going to show you guys that the average holder or the average buyer of LabD since the year has started is actually down. Okay, the anchored VWAP is going to be right under $16, right around that $16 price level. So if we see LabD continue to go up, that's going to be a really key area. Okay, market makers tend to buy and sell at these VWAPs. Okay, this is our month today right here in yellow. You can see we pushed up above, we came down back to it, and then we pushed up higher. Now, LabD has had this bullish divergence forming here for a while. If you're not familiar with that term, we have a low, we have a lower low, and then we most recently just created a lower low again. But when we look at our RSI, this is your relative strength index, you can see we actually made a low, then we came over here and we made higher lows, and then we made higher lows here again. And so what we've been doing is building relative strength, increasing in relative strength as the price of the stock has gone lower. That's a simple term known as bullish divergence. And sure enough, we're seeing a move up in LabD. So it makes sense that we're seeing a pullback here in LabU as well as hitting our major resistance levels. So right now above our current zone right here, we do have 643, $7, and 757. We haven't really been able to break through those areas. If we do break above 757 and flip that to support from resistance, it is possible we can go up to that 942 area. That would basically be my bullish price target if we get a breakout for a full 100% retracement. Now let's take a look at XBI. All right, XBI looks very similar to LabU. No surprise there. We got a nice 1, 2, 3, 4, 5. We did actually get above our major resistance levels here, but we weren't able to get all the way up to the breakout level of about 92.62 for a full 100% retracement. We did actually create some bearish divergence. So we mentioned bullish divergence before, but take a look how we're making higher highs here, right? So we're going up on the price of the stock, but the RSI here is actually flat, right? We can take a look and we can see we have a high, and then we have, it's very, very slight, but we have a slightly lower high. Either way, we created a divergence because, the RSI was not doing the same thing that the price of the stock was. Okay, and that's a bearish signal. And then here we can see we actually got our MACD crossover to the downside. That's when this red line crosses down below. Oftentimes, if you see a bearish divergence combined with a MACD crossover, um, that's a pretty strong sell signal. Okay, the reason being is the RSI is a leading indicator, so it's going to tell you what price is doing right now. And then you have a lagging indicator such as the MACD, your moving average convergence divergence, and that's going to be a little bit more of a lagging indicator and tell you what's happening with price after it's already happened. Like, it's going to be like, hey, this is what just happened, right? If you take a look, we also broke through the month to date anchored VWAP here, and we're currently testing the year to date anchored VWAP right now. That's exactly where we're at. This is going to be a strong support level here at 82.92. If we flip this to resistance and we get below that anchored VWAP, it's very possible we're going to come back down and retest our former supply zone, just like here where we had a breakout. Prior supply becomes new demand, just like old resistance becomes new support. And so this would be, an area where I'd be looking at, right around this $80 to about $78 price range. We'll look to see if we find some support if we stay below this 83.28 area. Now, we talked about the XLU XBI chart, all right, and we're going to go into this. This looks like a really, really big bull flag. All right, we do have this wedge here forming. Let me change the color real quick of this. So it'll be really interesting to see. Now, this is actually a pretty good, measurement for, the market going risk on versus risk off. Okay, if you see, we've been going up here a pretty significant amount. All right. And, that's basically people retreating. Okay. People falling back into utilities. And the reason being is Jerome Powell has been speaking a lot, right? He just spoke last week. He's actually speaking again this morning. And so it makes sense that people are going into a little bit more of a risk off environment. But if you take a look, really, here's the bottom in October of the stock market. Okay, and we've really seen this index go down a lot. Remember, when this goes down, XLU XBI chart, okay, the market is going more risk off. Okay, or I'm sorry, going more risk on, and so that's when you're going to see asset classes like tech, okay, really start to go higher, and tech has been leading the way throughout the market. Just something that I like to use kind of like as a market internal to kind of gauge sentiment. If you zoom in here a little bit more, this is actually a really good, way to take a look for, utilities, and different things like that. All right. When you're using those MACD, indicators along with the RSI, all right, you can see here the MACDs worked pretty well on this chart. And so when you go up, you get the crossover to the upside. See, we're followed by a strong move. Okay, we got the crossover to the downside, followed by a strong move, crossover to the upside here. And we're starting to see this push back up again. Okay, we also broke this trend line here on the RSI. Perfect retest. Okay, then we put in a double bottom, then we got the MACD crossover, and then now it started to move up. So I really wouldn't be surprised to see this move back up higher a little bit more as we head, or as Jerome Powell is speaking more. But it's going to be really interesting to see whether this is a continued trend or if we're going to start to see, XLU utilities start to underperform relative to biotech again. And if that's the case, then that's going to be an overall gauge that the market is a little bit more risk on, and willing to invest in things that are a little bit more speculative, or things that are maybe not as profitable as some of the other more profitable companies in the stock market. Now, hopefully you guys enjoyed this video. If you did, smash that like button, subscribe to the channel. Feel free to email me too at zachleytrades@gmail.com if you guys ever want to do a coaching session. We can do some coaching sessions, some one-on-one Zoom sessions. I've been doing a lot of those lately, so I haven't been dropping as many videos. Sorry about that, trying to catch up. But yeah,